You're listening to AI Prism from Seoul Economic Daily.
Foreign investors watching Korea just saw something unusual. The KOSPI fell 8.95%, while the Nikkei dropped under 2%. Korea's four largest chip names lost about 1,522 trillion won, roughly $1 trillion, in market value in 3 weeks. Yet the index now trades at a forward PE of 6.36, near its 2008 crisis low. Hong Kong and Taiwan rose on the same days Korea sank. That divergence is the real story for anyone weighing a Korea allocation today. It's Tuesday, July 14th. Here's why global investors are paying attention to Korea today. The sell-off accelerated after SK Hynix completed its US ADR listing, removing a major catalyst. Korea Investment and Securities then cut its second quarter operating profit estimate for the company below consensus. Renewed US-Iran conflict around the Strait of Hormuz added an oil and shipping cost shock on top. Here's what the numbers show. The KOSPI fell 8.95% versus a 1.92% drop for the Nikkei, while Hong Kong and Taiwan indexes gained. Samsung and SK Hynix together shed 1,372 trillion won, about $918 billion, over 3 weeks. Korea Investment and Securities set SK Hynix's second quarter operating profit at 60.4 trillion won, roughly 8% below the near 65 trillion won consensus. The KOSPI's 12-month forward PE slid to 6.36, close to the 6.3 seen in the 2008 crisis. Consensus 2026 operating profit for KOSPI firms rose 5.27% over the past month to 970.8 trillion won, about $649 billion. Investor deposits fell to 105.5 trillion won, roughly $71 billion, the lowest since February. Brent crude for September rose more than 4% to around $79 a barrel as Hormuz traffic thinned to 6 ships a day. MUFG's market cap topped 42 trillion yen, about 388 trillion won, or $260 billion, making it Japan's most valuable listed firm. So what does this mean for global investors weighing Korea exposure? Earlier, we said Korea diverged from its regional peers. Here's what that actually means for you. A forward PE near the 2008 low against a 5.27% upgrade to profit forecasts signals a positioning-driven sell-off favoring selective re-entry over a broad underweight. Late July earnings from Samsung and SK Hynix and the hyperscaler calls starting with Alphabet on the 22nd will decide whether the AI capex trade resets or resumes. That's today's AI Prism, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a Won Ifrah award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.